guys. Welcome back to the Capital Mindset Show. We are your hosts, Austin and Fabio, and today we're going to be talking about Discovery, some recent news that's come out about Discovery, ticker symbol DISCA. We're going to be talking about some of the recent developments that have come out from, I think it's been the US, about some of the efforts to hamper the current merger going through. And without further ado, what are we looking at here today? Well, we're looking at a situation where congressional Democrats are saying that they're concerned about some of the implications that the Discovery and Time Warner merger will have on diversity efforts, specifically the Latino population that is underrepresented in Hollywood movies. Separate from that too, I believe there is also a what do you call it? A concern about a monopoly of sorts over this as well. It's like a trade agreement. It's the FTC is kind of looking into this a little bit more. Something else that's also important to note about this too is that the Discovery Time Warner merger is supposed to be one of the largest mergers in the direct to consumer subscription based service. It's supposed to be a huge merger that's going to have a wide impact, a wide level of ramifications for streaming services. And now I actually kind of think, my personal opinion, I think that yes, maybe some of those diversity concerns hold credence, but I think the real thing is that we typically tend to see Netflix contributes a lot to the Democrat Party. And I actually think that Netflix is concerned, rightfully so, about this merger going through. So likely they are lobbying Democrats to potentially halt the merger. But that's just kind of my personal opinion. You know, I haven't really seen any evidence to indicate this other than the fact that Netflix and Disney are both concerned about this, and the fact that Netflix contributes significantly to the Democrat Party. So that's just sort of me just reading into the nuance regarding these situations and what's kind of happening. But what about yourself, Fabio? What do you think?
I don't have an opinion, I guess, on that, except I just have questions. So basically what you're doing is you're getting so the facts are, from what you stated, based on your opinion. So you're forming your opinion based on two facts. The facts that Disney and Netflix contribute heavily to that party in the United States.
Yes.
Okay.
Netflix does. And then
Netflix does.
Disney also owns, I think it's ABC.
Mhm.
Disney also, I think it's the Jimmy Fallon show. That's also a part of Disney as well. Now, this is just me taking an objective
Okay.
look at this, like my own political opinions aside, just taking an objective look at this. Of course, Netflix would have reason to fear this merger going through, and if they contribute significantly to the
Well,
Democrat Party,
maybe not
yeah,
fear it, but like, the more leg up you can, like, you learn in business strategy that you want to utilize whatever tool available, and government is one of those tools that is
yeah.
available. Okay. So I get it. So, and then what do you think are in your personal opinion, if you had to put a number or percent number, do you think that it's going to actually be successful in stopping it, or do you not think? Because I would imagine that AT&T, Warner, they have their own interests, right? They want
Yeah,
this
well,
to
I
go
mean,
through.
like in this instance, for the sake of the saying, I'm not saying one is the enemy or the other, but the enemy always has a vote. So in this instance, AT&T, Time Warner, Discovery, like they're going to have a vote in
Cool.
this say as well. I think this
Okay.
could have a potential of going through, in so much as they are able to successfully capitalize this on the time frame that they still
Hmm.
have majority control in multiple different areas of the government. These are just like kind of my personal opinions, though.
Okay.
So it's not, this isn't meant to be taken as fact. This is just something I'm noticing, and it makes perfect logical sense to me why they would be concerned about a potential merger like this going through, because this would legitimately create one of the largest direct to consumer subscription based models in existence at the present moment in time. So I actually think that there might be a risk to Discovery shareholders here. So I would actually like to increase my margin of safety here from 15 to about 20%, maybe even 25%. Because if this merger doesn't go through, what is the future of Discovery? What does the future of Discovery look like? I mean, the business itself, we've looked at this business before. It doesn't look like an entirely bad business. In fact, it's actually quite a good business. But still, my investment thesis is I'm planning on this potential merger going through. So if the merger doesn't go through, then
Hmm.
what else could be like? Why else would I invest in this, basically?
But I mean, they could probably still experience some growth, but kind of just looking at this is a very cheap business. I think around these prices, it was a little book stock, a little book that beats the market. And now we're back at these prices. So for me, this is a very, well, we were just talking about it just a little bit, I think yesterday. And I showed you, this is a very small portion of my portfolio. I think I might be actually adding or nibbling, just nibbling here. And for some of you who watch our channel, I've noticed that you guys are very passionate about this company. And I think maybe it's a larger portion of you guys' portfolio. So let's go. Let's hope it goes to the moon. And what I can always say about this right now is not much has to go right for Discovery to actually experience market beating returns. Now, that being said, the reason why you might see our discount rate is so high, I would agree with Austin here. I think that there's a lot of uncertainty, but that's not necessarily a bad thing. If we're being compensated for that with a cheap enough price, it may be advantageous for us to actually take into account what our expectations are, and in that margin of safety that we develop, we can leave room for error. And I think 20% at the very minimum does leave a lot of room for error. And let's see if we can even do 25%. So we can almost get there. So that's a very strong discount rate. Okay. So let's not kid ourselves. And so I'd bring it back down to 20, just because I think the audience would think 25 is a little bit too much.
Well, I mean, like we could also say 25 and then a 10% growth in cash flows, because even though you don't want to extrapolate the past on the future, we're seeing here a 14% average growth in cash flows over the past years.
I would actually say that the growth, I would lean more on that being or coming from the merger, because if they have that huge library of content all together, I think it would make it very compelling. Like HBO Max coming into play along with Discovery Plus, I would like all of that under one umbrella. I would be more confident in the business together than separate. However, Discovery by itself isn't something to just dismiss entirely. They do have some debt risk. We have to remember that. It's nothing to sneeze at. And we shouldn't just completely say that it's riskless, right? There is risk involved. The risk obviously is execution. We talked about this in our previous videos about Discovery. That's where I'm stepping in and stating that. So Austin gave us his opinion about the reasons as to why he thinks the merger is being challenged.
Again, this is also just my opinion. The real reasons it's being challenged is because it might harm diversity efforts, as Democrats have said. However, looking deeper, this is just my personal opinion. I could be completely wrong, and I'm okay with that. I'm just trying to approach this from an objective standpoint. So
yeah, no, and I think a lot the way you're formulating that opinion there, I can see where it's coming from, and I think it may be correct. If I'm going to give my opinion on that, I think that might be correct. And well, I don't think it's that much of a risk that it won't go through. It actually may turn out to be more noise than anything else, but we'll have to see. It's a wait and see thing. So I do think that the price won't really move until we get some clarity, because the market doesn't like to have uncertainty on outcomes. As we get more clarity on what the outcome is going to be, then I would expect the price to come in, because the price to move in some direction, right? Hopefully to the upside, but that will bring in more buyers. More investors will kind of feel more comfortable with the direction of the company because it's predictable. They know what's going to happen more or less. So I've stated that opinion for quite a long time now, that I don't expect Discovery to have the massive appreciation people expect just yet. It would have to come after either the merger is denied or the merger is allowed to go through. Then the market can digest what's going on. And then from there, we can see some price movement. So on that note, guys, thank you guys for watching. If you have any questions, leave them down below. There may be some things we didn't really cover, and you guys can comment it down below and then share with the community your thoughts. We'll comment when we have the availability to. We really appreciate when you guys do. And then if you guys have different hypotheses as to why the merger is being challenged, maybe at face value, that is why it's happening, or maybe there are some ulterior motives that you might believe that may be there, or not ulterior motives, but alternate reasons, more complicated reasons than one might think. But other than that, guys, thank you guys and have a good one. Bye.